Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com. Our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that today is to help show you what kind of stocks to buy. And the ones that we want to focus on in this video are stocks with outstanding earnings per share. The reason why we want to focus on stocks that have outstanding earnings per share is because it's a strong catalyst that's going to ultimately move the stocks and move the market higher. If a stock has incredible earnings per share quarter after quarter after quarter, it can't help but move the stock price higher. And so where in this particular scan, it's a super strict scan where I'm talking about looking at stocks with accelerating earnings quarter after quarter after quarter, stocks that have earnings of at least 50% or greater quarter after quarter after quarter. And let's go in there and take a look. Not too many stocks are going to pass this scan at all, which is why any stock that does pass this scan, we definitely want to be paying attention to as well. One last note on earnings. The reason why we really want to pay attention to stocks with these kind of earnings is because historically, stocks with this level of earnings have gone on to make 100, 200, 500% or more. So let's take a look, see what's passing them, and dive right in. Before we go any further, I just want to give you all the parameters of the scan so that way you could take it, put it into your own scanning software, and start using this immediately. So there's a lot to this particular scan, and again, it's super strict. So let's go through it and take a look, and I'll give you some of the rationale. So the first part is having accelerating percentage change in quarterly EPS for each of the past 3 quarters. So we want each quarter to be progressively better than the last quarter. That's something that's going to really give the stock reason to continue higher. It's going to be a great catalyst. If it's making more and more money every quarter, it'll be hard for the stock to collapse, unless if it's already had a big run and there's a changing landscape and the market sees that, and then that's how you see stocks that do have big time earnings start to roll over before the earnings actually catch up and start rolling over themselves. But that's something entirely different. We always want to consult the stock chart whenever we're doing our buying. The percentage change in the latest quarter's EPS versus the same quarter in the prior year is 50% or more. So as well, we mentioned in prior videos, we're talking about this quarter, so Q4 of this year versus Q4 of last year instead of Q4 of this year versus Q3. The reason why we're interested in looking at the same quarter over quarter from the last year is because it eliminates seasonality. So, for example, let's say we have a huge Christmas sale, brings in a lot of sales, and before that, in the autumn or the summer months, sales are kind of stagnant. Looking at quarter over quarter, it normalizes that. It eliminates the seasonality, and it gives us a much better picture of how quarterly earnings are doing. And we want 50% or greater because this is going to be a real tough scan for stocks to pass. And if they are passing this particular scan, we definitely want to know about them and have them on that special watch list where if they are setting up, we want to be ready. The percentage change in the fiscal year EPS versus the prior year last reported is 1% or greater. So the reason why for that one it seems real low is because we don't want to start weeding out stocks that are just starting to ramp up, like some of our early IPOs. We want to be able to allow them to participate in this screen as well, and so that's why that particular parameter is relatively low. We just want to see growth in the percentage change in fiscal year EPS for that part. The rest of the scan is so tight that we don't want to eliminate something just for that one reason. The percentage change increase in next quarter's EPS estimate from the same quarter prior year is going to be 15% or greater. So these are the analyst estimates that we're looking at. And so it's one of the only times that we're looking at the analyst estimates, but again, we're looking at something that is going to really define this as a standout candidate, and it's really going to narrow the field as well. The annual percentage of EPS growth rate over the last 3 years is 25% or greater. We want to look at price. Price needs to be $15 or greater. Mentioned this a number of times. The reason why is because a lot of the major mutual funds, hedge funds, pension funds, they have rules and regulations that say that they can only buy stocks of a certain price, and that typically starts at around $15 or higher. And so it's their buying and selling that's ultimately going to move the stock price. And so that's why we're only interested in stocks that are at least $15 or higher for the sake of this scan. And then we're looking at stocks that have at least average trading volume of 100,000 shares per day or better. And the reason why is because we don't want one major player to be able to come in and move the entire market for that stock. 100,000 is pretty low, but I wanted to set a low threshold because we didn't want to rule out any stocks at that point, but we do have to have some kind of a minimum bar set, and 100,000 shares is substantially low. If I can't make that, then I'm really not interested in it. So let's take a look, see if any stock in the entire universe was able to pass this extremely strict scan, and let's talk about it. So this week, there's only one stock in the entire universe of stocks that are traded. So out of 10,000 stocks in the stock market, there's only one stock that's able to pass this scan right now. And that one stock is Arista Networks. Ticker symbol is ANET. And so what we're looking at here, the scanner is ChartYourTrade MRI. It's something that we developed in-house. I used to run all of these scans manually myself using a free software, and then I started using some very expensive software, and I wanted to further filter down based on this here, this ideal growth stock screen. And you could see all the parameters for all of our screens right on ChartYourTrade. We wrote a blog post called How to Scan for the Best Growth Stocks, and it outlines everything. But doing all that stuff would take quite a bit of time, so we developed this tool that allows us to just run any of our scans and then sort by this ideal growth stock screen, click submit, and then it's giving us all of the results of the scan, and it's done instantly rather than taking several hours of sorting through this scan and that scan and filtering down further on an ideal growth stock screen. Anyway, back to Arista Networks. So it's one that's passed our scans multiple times for a very long time period, and we want to continuously be aware of a stock like this because it has such outstanding earnings. It's had an incredible move so far this year alone. It's already up over 100%. It's up 118.5% right now. And yeah, from really, it really started to get going this year. Past it retook its IPO price back in August. That was when it really started to break out, but there were opportunities along the way, and that's why we need to always keep stocks like this on our radar. Well, when they pull back into their moving averages, when they break out, and they start running again and they start pulling back to these moving averages, there's so many different ways to play a stock. And when you know that you have a really good winner, and the way that you're going to know that you have a really good winner is if it has these kind of qualities that stocks have had historically when they've made these incredible moves of 400% really from its IPO. You need to pay attention to those stocks because, well, we know that they have a greater chance to be a big winner, and when the opportunity presents itself, we need to be ready. And so that's why this is one that needs to be on everybody's watch list, and that's why we need to continuously scan the markets for stocks that are like this, that are going to fit this mold. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally answer you. Also, give us a little thumbs up if you like the video. That helps us out quite a bit. And also, make sure that you subscribe to our channel so that way you make sure that you get all of our updates. Thanks again so much for watching. I truly appreciate your attention and your time, and I hope that you enjoy the rest of your day, and I'll see you again in the next video. Take care.